What's up guys, Everett Smith from Douglas Allman Real Estate, and thank you so much for tuning into my channel again at Easy NYC Real Estate, where I make New York City real estate easy for you. In today's episode, I have a conversation with Mark Freedman, a loan officer from Citizens Bank, who talks to me about some of the trends that we're seeing with rates and refinancing as we end 2020 and move into 2021. I love having conversations with Mark because he likes to give it to you as is. Don't forget to stay tuned till the end for some actionable tips for first-time home buyers, as well as people who need to sell their home before making their next purchase. I'll see you at the end. So, Mark, I wanted to touch base with you today. I know we had a little bit of a chat last time about FHA loans, and we'll talk about that again later. But today I really wanted to, as we close up the year of 2020, talk about sort of everything that we're seeing on the increase of housing loans and apartment and condo loans. I was just kind of curious because on our end, there has been an increase of sales and it's starting to kind of look like what might be normal again as we go into 2021. But I wanted to ask you what you're seeing for the people who are out there looking to get mortgages right now.
Sure. The term normal never really fits New York. As there are always parts of the country that have ups and downs. We seem to be, because the city's so big and has so many different types of housing units and the metro area is so big, it's across certain sectors. We see tremendous activity. Other sectors, that have been dead, I think what you referred to, things are starting to pick up in the luxury sector in Manhattan. Parts of Brooklyn, but more of the Manhattan luxury sector. I think people are seeing bargains. People are also getting bored being outside the city and want to come back. So
that's true.
In terms of return to normalcy, I think we really do have the next 3 to 6 months for some sort of equilibrium to set in. I mean, with people getting vaccinated in Great Britain and, it being around the corner here, along with interest rates being low, the election being settled, I think people are coming out of their shell. If you're on the sidelines and kind of nervous about making any kind of move, you're starting to see that. And, it is a weird time of the year, for our market here in the city. Normally, because you never know what's going to happen around Christmas or New Year's, it's supposed to be dead, but the last couple of years has been quite the opposite. And I think, just from a quick read of being out this weekend at open houses, and lines out the door again. So, where are people coming from? I don't know. But yes, to answer your question, mortgage rates are low still.
Of course.
We're still lending. And I think there's a little bit, people aren't going to be rushing to market to add product. But I think if you still have something on the market now, you're thinking about, those Christmas specials, the markdowns. So I'm seeing brisk activity. I don't know what you're seeing on your end, but I'm seeing it. I'm in the middle of it.
Yeah, for sure. There's a lot of people are picking up, and I think it was Allison that was telling us, I don't know if she told you, but she said she had about 19 showings at 2 different properties, and that's not including like all the rest of the properties I know she usually has showings at. So that to me is activity. Right before Christmas time, I don't know what that means. If a lot of people are just kind of, like you said, looking for those Christmas specials, or is there something driving that? Maybe like people trying to cash in on whatever tax benefits there might be at the end of the year?
Yeah, this whole tax benefit thing, kind of pretty much got taken. The real estate deductions that we get, property taxes up to $10,000. And interest deduction up to $750,000 loan amounts. Yes, they're good. Not going to complain. They were better before. But, if you close on a purchase by 12/31 of this year, that means you can start deducting things on your 2021 tax return. You don't have to wait till your 2022 tax return, because you are now a homeowner.
Right.
Sellers, anyone who wants to leave has probably made up their mind. They're either out or, if they want to leave the city and they're still holding on to something, it's either time to cut bait or fish because, if you're holding on to a price that was very 2017 and you're not selling, you may either drop your price and get it sold or pack it in. So I think you're probably seeing a little bit of that as well, because there's definitely buyers out.
There's definitely buyers out. I think what it comes down to is, like you said, just being aware of your home value may not have increased in the past year to 2 years to 3 years, depending on when you bought in 2017, 2018. Like, those were super hot fire months, basically. But what I think is going to make the difference, and what has been making the difference, is how badly do you want to sell, and how ready are you to move somewhere else? Like you said, a lot of people have been stuck indoors, realizing that they're looking at the same four walls and they want something new and something different, something fresh. Now is going to be the time where you at least start to look at those things, and I have a feeling that as soon as the new year starts, those trends are going to continue, regardless of any tax benefits, like you said, that they might be able to take now or next year.
Don't forget, rates are historically low, like insanely low.
Yeah.
And on top of that, our friends at the FHFA, the agency that oversees Fannie Mae, Freddie Mac, FHA, etc., government enterprise style lending, if you will, they raised the limits across the country, especially in places that are high cost like New York. Our loan limits for a Fannie Mae, FHA, Freddie Mac loan for a single unit are $822,375. That means flexible terms, great rates, up to 95% financing, and a loan size of $822,375 on a single unit, and $1,053,000 on a 2-unit. You can do 85% financing with Fannie Mae and Freddie Mac, and as you know, we talked about FHA. We can do 96.5% financing on a 2-family, up to a 1,053,000. That's a big loan.
That's a big loan.
With favorable terms and great rates. So, fortunately, our friends in Washington, following housing trends around the country, raised limits in areas where housing continues to increase in price, and that makes lending, that makes the terms easier. We lower credit scores to qualify at. If you happen to be in forbearance while it was offered to you, Citizens Bank, for instance, on our portfolio side, we need you to be caught up for 12 months. Fannie Mae, you can be either caught up instantly, or if you caught up over time, you just need 3 months of solid payments, and a new loan from Fannie Mae or Freddie Mac can be written. So, if you had any issues during COVID, or if you took it as a precautionary measure, we can do a loan again for you. So it's some pretty high limits. I think that's going to fuel the spring market as well.
Yeah. Agreed. It's very positive conversation. I like having these conversations. I feel like a lot of times when you're in it, especially, and just even like another way to explain like how much activity there really is, I've had more rental showings too than I've ever had in the past 2 to 3 months, basically. Actually, I would say even longer than that, but I'm really focusing on the past 2 to 3 months. The rental market has been extremely slow, and I think a lot of people for a very long time have been quote-unquote considering their options, which is great, but at some point, like you said, you get sick of those four walls, and when you're looking at real estate, you're seeing what's out there, and you see the opportunity that could be had inside a brand new space, maybe that home office you're looking for, it starts to get people excited, and we haven't had much to be excited for the past year. So, people's emotions are starting to build into this as well. And I think what that brings me to is tips and some advice that you could give for someone. Let's just, from a first-time home buyer standpoint first, what's like the big takeaways that they should know about right now?
I always say it, good market, bad market, a different market. If you're paying rent, you're employed, you have some money saved, there's absolutely no reason, unless you have a commitment issue, to go take a look to see if you can afford to buy something, because people are definitely rolling up their sleeves and making deals. Get pre-approved. That way you have a real document that says you can afford this. It's vetted, you've been vetted, the golden ticket, and you can actually, potentially go buy, not a house of your dreams, but like you said, new four walls, maybe even some outdoor space or a roof deck. It definitely is, I bought my place I signed my contract in 2008 and moved in 2009. So if you remember the real fun financial crisis when people in my business ruled the world, sorry guys, but we did a great job. This time around we weren't the bad guys, but the interesting thing
True.
is we're the good guys this time around, and I definitely was a little freaked out when I signed, but it was the best decision I ever made. And I did the exact same math that I tell my customers to do. When I added up how much I had spent on rent, albeit it was a really cool apartment in a great neighborhood, I literally, choked up a little bit. Like, wow, that's a lot of money. And went and bought, and, going on my 11th year, and this neighborhood that, I chose exploded around me. And, I joke that I want to be carted out of here in a box. I don't want to move. I love it. So I thought it was a once-in-a-lifetime event, the 2008, 2009 real estate market. But we're almost in sort of a weird twilight zone. Like, the market isn't truly depressed everywhere. I mean, you can see there's bidding wars that go on in some sectors.
Mm-hmm.
But, there are definitely, to call it a bargain in New York is probably a misnomer, but there are definitely deals to be made. And if you definitely, as a first-time buyer, casual looker, you're looking to move, there's nothing wrong with owning something. And if you can afford it, you might actually be surprised how much you can afford with rates insanely low, with rates in the twos. Borrow $500,000 and without, monthly charges on top of it, on your mortgage alone, you're only spending about $2,000 a month. And what a, $2,000 a month gets you in rent. So you can buy a pretty cool place with $500,000 and a down payment on top of that, if you have some money saved up.
Absolutely. Absolutely. And when you're finished with it, you rent it out. Like you said, or sell it.
Even if appreciation goes back to normal, like I'm old, so appreciation, 2% a year on real estate, you're doing great.
That's great. Yeah.
Yeah, but over 10 years, something you paid $500,000 for, and you sell it for $800,000. Oh, okay. I mean, I'm not great in the market, so it's not a bad return. Unless you got somewhere to live.
Exactly. It's all based on what you're looking for, though, right? I think there's a lot of homeowners right now that think that value is value, and maybe their product might be the hottest thing on the market. Sometimes you just have to consider, like, for what's happening right now, unless you really need to sell, you should, if you want to sell, right, like, think about those gains now versus what they could be in X amount of time down the line. Just kind of like thinking with the future in mind is really what I'm saying here.
No, agreed.
That's for first-time buyers. Now, what about someone who would potentially have to sell their home before looking for the next one?
So it depends on where you live and what you have. And, as I've told frustrated sellers who need to sell to buy, they have their departure residence, as we call it in my business, but the place that they live now is up for sale. They're asking too much. They have their heart set on getting a number, because that's where their head said it should be, not reality. And, the deal that they're getting on the new place is so spectacular that, if you take a little cut on the one that you're selling, you're making it up by what you're buying. Like, if you can make deals like that today, you kind of have to let go of the past, the previous place. It's a little trade-off sometimes, because, it's sometimes hard to sell a market like this. Sometimes it's not. You might get lucky, but, you do a little give and get, and you can definitely walk into something that is, bigger, better, faster, maybe like the location better, has outdoor space. But again, trade-offs. It's like the prom king or prom queen. The luckiest person in the world in high school. Everybody always, would look at that perfect person or perfect thing, which doesn't exist in real estate. Bad analogy, but again, you might have made a great deal when you bought.
Yeah.
Maybe you didn't, but when you're buying something You don't want to carry two properties by renting your current place. You might have to nip a little bit, but if it gets you something, then definitely, make the jump.
If you in your head have decided that your home is no longer working for you and you are going to move, the best option is to understand that it's time to let go of your home, right? Like, just like you said.
It's hard to do that.
It can be hard to do that. It can definitely be hard to do that. But if the reason why you're moving in the first place has anything to do with outdoor space, you need more room, like an extra room for an office, right? Maybe you and your spouse need an office. Any kind of reason like that. Or maybe you're going to be going back to work at some point or another. Who knows when that actually might be. But maybe you actually want to find that spot that's a little bit closer to your office right now, because that would be the time to do it. Who knows? But again, if those are the reasons why you want to leave in the first place, just make sure to weigh them out in the beginning against what you currently have. And then say, like, am I willing to give up this? And if not, maybe you can find that in the next home if you're willing to, like you said, lose a little bit more or pay a little bit extra somewhere.
It's math. It really is just
It's math. It's definitely math. I love it. I love it. All right. Well, that's all I got for today. I really appreciate you for taking the time out to do this.
My pleasure.
Is there any last words that you would want to say?
Well, my 2020 pronouncements this year has been nothing short of a disaster in so many ways. But I guess the silver lining would be, that once-in-a-lifetime chance that I thought I had in 2008 when I bought. I firmly believe that we're having that moment. And the door doesn't stay open that long.
Mm-mm.
So I have a feeling, like I said, it's going to be an interesting first 6 months of the year, but with the vaccine being delivered now and some hope that we'll return to normalcy, I think, the window is going to close. The economy can go a different direction at the flip of the switch, but all indicators are pointing to some kind of recovery.
Yeah.
And if the switch gets flipped, that once-in-a-lifetime chance to buy, it's closed again. So if you can, and like I said, if you don't have commitment phobia, go look, get pre-approved, and go buy something. It's out there. Just gotta go find it.
You just gotta go find it. You just gotta go find it. And make sure that you're prepared with, like you said, a pre-approval before you go to do it.
Because no one will talk to you if you don't have one.
It's basically, it should be mandatory. Like, I don't know why.
Well, the thing is, and again, not to belabor this, but if you, agent, are risking your life, in theory, by showing property, which we're doing, the least the potential buyer can do, it's not an immunity passport, but at least do their homework. So if you're taking up, someone's clean airspace, at least have a purpose. And the purpose is that you're out there looking to buy and you're seeing what's out there. So,
yeah.
To me, it's not asking a lot.
It doesn't take much.
And it's free.
It's free.
85.
Yeah, absolutely. Makes sense. All right. Well, Mark, have a great drive and stay safe out there.
Have a good night.
I will talk to you soon. Happy holidays indeed. It's always a pleasure. Bye. That's a conversation with Mark Freedman, ladies and gentlemen. Enlightening and entertaining. If you have any more questions, our information will be in the description below. And if you liked this video or thought it was helpful, please hit the like button or share it with a friend. And feel free to subscribe to Easy NYC Real Estate for even more helpful tips, listing videos, and guides around New York City.